Yeah.
Hello, everyone. Welcome to Market Moves. I'm Jason, the Wizard of Ops, and back from his vacation is Jay, Dark Matter. How was it, man?
I love it. For our fans and viewers in Spain, what a beautiful, beautiful country you have, and how hospitable you were to me and my wife. I appreciate that. So amazing country, Wiz. You and Jill and the family are going to love it when you go visit as well.
I look forward to it. I do. Um, okay, so let's talk some market stuff because it's been wacky. Since you've been gone, it has been wacky.
I was about to
It's
be
been
like,
wacky
are
for
you
the
are
past
you
couple
gonna
months. So hey,
are you gonna sing the song since you've been gone? You know.
All right, so let's see first. Let's take a look at your trade plan, and we'll talk some other things too about a little bit about dispersion and some energy things too. So, but first, let's do your trade plan. That's what people are here
Yeah.
for, right?
Yeah, no, definitely. I think, just last week as a recap, our trade plan had, 75. So we like to do a container. The weekly container had 7,300 as support. And then 7,400 was basically a gate until the gate fell through, right? Or a pivot, if you want to call it that. So, last week we did not get all the way down to 7,300. I think 7,320 something was the low of the week in futures, somewhere around there. But we then held 7350 SPX, at least an intraday session. And I think it came multiple times. And that 7350 early on in the week kept popping up on 0 DTE until it started to become quite important on the weekly view as well. So I would say another great, trade plan on our end here, Wiz. We found the container, let's say, and this market just keeps making new highs, new all-time highs. I spent a few minutes in the trade plan here. I just want to call it out for everyone. If you've not had the chance to read it, please go jump in there. I did a little bit of analysis and call it a paper here, not a white paper, but a paper Wiz research, just in terms of like why we had such a massive rally, right? And my opinion, a lot of that rally concentrated just around Q1 earnings. Like it's how much it's adjusted, the impact, where the AI trade is going, where it's going to disperse next, let's say. A lot of information is packed into this overview that I did here. Would highly suggest it. But if you take a look at across the board, I'd love to kind of just get your thoughts in general here. Just the blended earnings growth, right? While yes, it's been concentrated to a lot of these big memory, AI, semiconductor stocks. I think that's one thing that's kind of changing my bias ultimately here. While I know we're frothy, I'd love to look for a pullback, and we'll talk a little bit about that here today. I think in general, if you're saying comparing this economy or the stock market to the .com, I'd say you at least have earnings here. .com did not have earnings. It's just a bunch of, hey, I owe you a bunch of visitors who are going to turn into revenue, right? That didn't go so well, right? So I'd love to just pause, get your just general thoughts now that we're past the majority of earnings.
That's actually not that true. The .com had earnings in few concentrated names. Microsoft was making a ton of money. There were some names that weren't making any money that kind of like the open AIs, I guess you could say, of this, like the Sun Microsystems and stuff like that, making no money, but are valued at like trillions of dollars. I think that also a lot of this earnings growth is kind of like a cyclical accounting thing. So it's looks great if you're looking at it from here, but it's more like there are foreseen accounts payable kind of thing without any cash coming through. So I think it's a little bit iffy to me about that much earnings growth. But the other thing too is that there's been a lot of liquidity injected into the market. The debt, American debt has just skyrocketed. I think we just crossed 39 trillion and just crossed 100% of GDP. And really that's what drives earnings more than anything. and they're 84% of the companies beating their earnings per share. That's always kind of speculative too, because the companies make their own estimates, and usually they underestimate them. And 10 out of 11 sectors growing in their earnings. That's a big one, but that's part of the liquidity kind of thing too. I think.
Can you guess which one did not grow?
Utilities.
What was the one?
No, utilities would be positive. Hold on. I would say maybe discretionary.
Healthcare. Healthcare was down.
Really?
Yeah. Overall as a sector. Yeah. Well, I shocked it by that as well.
Yeah.
But I guess they took a beat down. There's different laws passed. Trump kind of came for big pharma.
Yeah.
I guess some of it makes sense.
I mean, it kind of, so in that sense, it somewhat makes sense, but there's a lot of companies out there that are flat in revenue and not, flat in market too, even in this huge rally. There's like a lot of inflation there. I would, Warsh being elected in, I still think that the Fed will reduce their balance sheet. So while this is all, very rapid rise, and it's interesting, and it's definitely, it definitely creates a situation where you can get a big rally, at least over the 2000s, right? Or 2020s. I guess it's the second iteration of the Roaring 20s, right? I do think that a lot of it is cyclical accounting games at this point.
Yeah, and I think you'll notice that when you read the paper in detail, right? Is that it's interesting. Your consumers, discretionary. You almost nailed it. Was one of the sectors. If it wasn't for like the Googles or Amazons or whoever else is in that sector, right? It's interesting that those like Walmart guided lower actually, right?
Yeah.
Due to inflation and the consumer weakening. So that is going to be the storyline, I think, the second half. I think, to me, I have to check my bias here as a trader, right? I have to see how that ultimately is impactful to the market or not, right? At this point, has the consumer, because you see the consumer sentiment every Friday or every other week, right, come out. That has zero impact nowadays on the economy. It's like it's just lost sight. Who cares about the consumer, right? So, but I do expect that's going to kick in, especially with interest rates. And one of the catalysts we're about to jump into here for this week is going to drive around that, which is PCE and GDP this week, which will be key critical events.
Yeah, I think also. So, did you write this paper?
I help. So I have this whole like AI machine built nowadays for trading, right? We take news, we take all of our trade plans. Like, it is my second brain, and if I had to say, am I taking a trade into something, is what my AI like workspace has now become with. So we did our thorough analysis of all of the earnings reports, dissected it, looked through it. I think this is one of the reasons what we at least identified why you had the semis, memories break out. Like, that's the theme right now. That's the theme I'm going to watch, where momentum either gets sucked out or continues to get pushed in. And that's where the market's going to move based on those industries, in my opinion. And you'll see that it's all written in the paper.
Well, year over year growth there, plus 27.7. Does that mean that year over month over month growth deserves to be 27.7? Because that's really what we've been getting.
Yeah. I think you've got some points there with the cycle. Call it the cycle, right? There's definitely, NVIDIA pumping into this company, into that company, and vice versa. I also think what I'm interested in looking, when you look at these numbers, when it takes in a few IPOs that are coming in, this market gets more expensive, right? Anthropic and SpaceX and OpenAI. So this next half of the year, like, I'm not going to predict the top and the bottom here right now, but it's going to be extremely volatile. You're going to see ranges like you never thought you saw before. And that's just because of how volatile this market is going to be, even without maybe negative news. It's just, that's how these high ranges are going to be going forward.
Yeah.
All right, let's jump in. All right. So in terms of the trade plan, the key economic kind of calendar events for this week, it's really the PC and GDP. We do have some consumer confidence numbers again, whether anyone cares about that again, as I said, that's today at 10 a.m. But the rest of the week kind of hinges on Thursday, essentially, Wiz. So Thursday's the big day, the big volatile day, or at least that's what it's set up to be as. But any thoughts around PCE and GDP that you would like to chime in?
Well, the PPI, that shock to the upside, and markets also seem to not care as much. I don't really, at this point in time, I don't know what news event. Even overnight, there was a little bit of scuffle between Iran and the U.S., and that hiccuped the market a little bit. But I still think that the real flush or the real sell the rip kind of thing will be when a peace plan is signed, and then we'll probably have a rip, and then because then, like I said, there's no more good news out there to be had. I do think that if kinetic warfare starts up, which I mentioned on my Substack, I think that's actually my base case, that there will be some more bombs and stuff like that. I think that would be a real catalyst, and it would be like a kind of like a hiccup downside. It'll probably get us to that 7,000 test. But I think the real downside can start when a peace plan is actually signed, and that'll be kind of the rip to sell. And it always seems like we're like incrementally advancing toward these peace things. And this is what Trump was complaining about before he bombed Iran, right? Like these small incremental things. Oh no, not quite a deal. Oh no, not quite a deal. That kind of thing. And I think that PCE though is going to have a major impact and PPI blew out expectations. I can't think that 0.3 month over month is going to be in the core PCE. Yeah, I don't think that's going to be.
No,
there's no way that's going to. I'm about to call out doubts of, is that actually the consensus belief? Like I'm going to look up what the consensus belief is right now of what PCE will be.
So I'm with you. I think ultimately Thursday's the reckoning day of the week. I think people will care about PC is how I look at it, Wiz, and it will finally be a little bit. I'm not here to predict that the 500 point sell off that everyone's looking for, but what I will tell you is it will be a number to be reckoned with, and I think retro, we will look at the PPI and CPI number then and say, oh shoot, how does those numbers look like going into June then? Right?
Yeah.
So, all right, let's keep going. We've got a full stack of items to cover through here. So earnings are not done. While we don't have any of the Mag 7s or NVIDIA, for example, reporting, I did want to call out a few kind of important tickers, Wiz. Some have the same, themes to what's picking up there. Obviously, take a look at Box and Zscaler from a software standpoint, even CRM and Snow. You'll want to see if IGV, if from a sector, it continues to find buyers, right, and has that stabilized a little bit, that sector. These will be a few tickers on hand this week that you'll want to pay attention to. You will also have Best Buy, Dick's, just from consumer discretionary, I would take a look at, and Abercrombie and Fitch. And then the ones that I'm really looking forward to here, Wiz, is I've got HP, and I'll explain the why here in just a minute, and Dell. Similar, following the memory, the CPU, GPU, AI kind of theme here. What stood out for me with HP and Dell is just Lenovo reported in China. Obviously not a big deal here, but they reported very strong CPU sales growth. They expect it to grow. To me, this is just not like that. The next wave of the AI trade where that money is going into is now, you obviously know memories, Micron and SanDisk have been rallying for some time now. I do now see there will be CPU companies like Dell, like HP that will start to get a little bit of attention. So that's why you saw Dell rally, I think, almost 20 points on Friday after Lenovo's earnings last week. But any thoughts on your end?
Yeah, I mean, CRM, I think, is the one that jumps out at me the most, just because that's part of the whole cloud. But then the next one that jumps out at me is what is Bitfufu? The heck is that?
I purposely waited because I was going to classify, hey, like my favorite earnings name of the week is Bitfufu, but I waited to see if you noticed it. I'm so glad
What
you did.
is
I don't
that?
know. I don't even know.
Did you look at it? Like, did you know what it is?
No, I didn't. I just wanted to live in the glory of its name and not be disappointed in whatever. Here, I'll look at
That sounds like
now.
it's like a Bitcoin kind of thing, but
yeah, it's a Bitcoin
Bitfufu.
miner.
What?
It's a Bitcoin miner.
Is it?
Yeah.
All right.
Chinese. It's a Chinese or company based in Singapore. Excuse me.
All right. Singapore. What is that? Singaporean? I don't know how they call themselves, but all right. Bitfufu. I'm going
Great
to be
logo too, man.
And the ticker is Fufu. So
yeah.
I'm going to put that on my list. I mean, it can't be great earnings for them. I mean, Bitcoin has been coming down, right?
Oh, I would not want to be.
Which is honestly, that's kind of interesting because I remember reading somewhere that people are or Iran is demanding their tolls in Bitcoin, and Bitcoin hasn't gone up. So it's like if they're demanding it in Bitcoin, how are they? Who's buying that Bitcoin? Is it just like this? I don't know. Just interesting.
It's not for this show. Let's keep going. Crypto could be its own hour. So, all right, on the key levels here, what I would say is on the downside, like 7,400 was my big, pivot on the week. Ultimately, I think we closed this gap to get a test of what this weekly trading will look like. So to me, 7,400 is my big support level. If we hold above that, I think at minimum, we're going to bounce between 7,400 and 7,500. Now, if we pivot and hold this 7,500, in my opinion, we're going to 7,650. The sell that has occurred here overnight is just interim then. We got near to the, kind of my first target above 7,500 here, which was 75.75 SPX. I think we got to 75.55 SPX in futures. But I ultimately think that's where we're at. The big pivot on the week for me is 7,500. We hold that. Even if we sell and we hold then, let's say, the gap and come back above 7,500, this thing's going to 76.50 then. Your thoughts?
I think it definitely can. There's been like your 75.75 target looked good last week. Now this week it's kind of muted quite a bit. I think people have bought back their calls. So there is a little bit of muted there. A couple things I want to point out is even over the whole weekend, the VIX closed at 1670 something, 77 or something like that. And we are currently basically flat in the VIX last time I checked anyway. Maybe it's like down a couple of pennies, but it's not reflecting. It's not right up. It's up to 1678. So now it's a little bit higher, right? Like just a penny higher, but still that doesn't usually mean a 50-point rally, right? And so I kind of think that we will at least test 7,500 again, probably come back and fill the gap that you were saying. That's the but kind of like this, I'm going to show a comment early. Yeah, it seems like nothing makes sense anymore. One of the, especially in the vol space, there are, it's something that QVR and their kind of retrospective, like what went wrong in that hedge fund. A lot of it was a lot of these vol correlations are kind of stretching farther and farther and farther apart, and that's really what I've been saying. I'm like, this isn't going to last forever. It's going to snap back hard. One of the ones that QVR described that I've noticed too is dispersion vol.
Yeah.
If you want to look at DSPX, that is the dispersion index for SPX, and that's showing you kind of what the individual, like they do a weighted individual implied volatility of all the stocks underlying. So before you look at it, and I see your arms crossed, so you're not clicking.
No.
What do you think? Usually, dispersion dispersion vol is usually a little bit higher than index vol, because you can't have that much, right? Like it can't be that big. If you so right now index vol is at 16.7 something.
Okay.
What do you think dispersion vol is?
A little bit just near it or lower or higher, excuse me. Dispersion vol.
Give me a number.
Yeah. 17, 18, somewhere around there.
It's at 37.
30. Okay, now walk us through knowing the number. Holy, you're double
That means
the amount.
if you were to short all individual vol, like, obviously nobody's going to be able to do that in the retail space, especially, but short strips of individual vol weighted for each S&P 500 component and long S&P vol doing a strip, then you would realize a 21% implied volatility gap, like that.
Wow.
Almost like as an arbitrage. I don't want to say arbitrage because I don't want to, that's not really what it is. It's not really an arbitrage, but
well, I also saw the skew of VIX as well, right? Like, that looked, at least there's not the one that you and your institutional Volland provides, but I did see something online over the weekend where even the skew of the VIX was just so far off, right?
Mm-hmm.
I think it was doubled the amount difference. I'm kind of curious from a Volland institutional, what is your skew also showing similar?
Our skew is actually showing on June 18th that for the June 18th OPEX, it's pretty fairly priced until you get down to 7,200. We're beginning to see the drop in dealer positioning Vanna expectation from that 7,000 strike.
Got it.
Vanna does not become positive until 69.72 for the June OPEX. So, I mean, that's kind of what I'm focusing on. I should probably get this week's, I'll check out this week's, but usually like the closer you are to expiration, the better priced it is. Usually we see, like, if I was to expect another big bump, right, in markets, I would want to see implied volatility overpriced, right?
Yeah.
It is not right now. It is fairly priced. And that's kind of shown, like our spot vol betas have been pretty close to zero for the past week or so.
Well, I was just going to say I was going to go into it. The SVB, just because I kind of keep track of it, right?
Mm-hmm.
You've been dead on it, at least closing wise, right? Like it's been basically neutral zero. There's no overvixing, no undervixing. Like it's hard to use it directionally like I typically do to gain some confidence.
Yeah.
While you're talking, I'm just pulling up
just to give some context on DSPX. The DSPX normal lows, and this is like the combined weighted implied volatility across all of SPX. The lows are usually around like the 27 area. And that's when VIX is usually like about a 10-point gap. But right now it's a 21-point gap, which is usually quite, and I think one of the QVR strategies was to close that gap, and it just kept widening and widening and widening. And before, it was like the market remained irrational longer than they can remain solvent. And it's kind of,
playing out that way too.
What?
I said it always plays out that way.
Yeah, it can. Yeah. So I think that's, back in May, there was a peak at 4150, give or take, 4162. There was a peak of dispersion index, and that was on May 14th. But when you look at VIX, and I'm just kind of looking at it now, I know I'm not sharing my screen, but when you look at VIX on May 14th, we were just chilling. You know, we were actually at the high of 18.08. So it was even wider back then. Like it's just got, you know, and I think really that dispersion vol may be what's kind of floating us a little bit, just a little bit. But yeah, it's just, I think that it's been a lot. Most, like, you know, when I look at a lot of underlying tickers, the you know, in terms of vol and Vanna and stuff like that, a lot of them deserve to have high vol because there's a lot of calls and puts being bought, so they're raising prices on that. So it makes sense from that. You know, that one makes sense. This doesn't make as much sense, the index, but those make sense. It's the way it should be, right? If people are buying options, the prices should be higher.
Yeah.
So, and people are not really buying many options. People are selling, you know, a lot of people are short options. Dealers are long options. I don't know why vol is so low. It shouldn't be, but, or, you know, people are buying puts on the interim and stuff like that. Vol probably should be a little bit higher, but it's actually fairly priced according to our skew metrics. So there's that. So I wouldn't expect like a huge vol movement. What?
No, I was just going to say that. I think even if you look at the weekly Vanna here in the SPX in terms of just volatility, right? Like 7,500 is that first critical Vanna level to keep in mind on. If we talked earlier, 75, kind of this zone right here, you start to see that has weakened. Now, you know, 7,600 has grown here a little bit, but 7,500 is really the pivot. You can see here, you lose this, you start to kind of unwind your way, but your first support, you know, there's a couple of support levels, 75 and 50 here to the downside, but your big one is that 7,420 to 7,400 region that we talked about. So I'm clearly a buyer as we get to the far left side of this, if the weekly holds up. And the reason I say that is from an exposure standpoint, we are positive. So for those just not aware here,
well, we won't be if we cross down below 7,500.
That's very true. We will get back to negative because you can clearly see all this right here. So that's
not put support. Those are people buying calls. So
yeah, 100. No, and that's what you know. For those, it was negative Vanna. It's flipped obviously, but when you go to your gamma here, you'll see that there's your 7,500.
Yeah.
So it's an accelerator, this zone. Like, think of this again like a field goal post here, right? Your two kind of posts are first right here, these two green bars, and then your secondary are those two big towers there you clearly see. So structurally, we should be trading within this range, but with all of this negative gamma here, this is an accelerator. Like you get one piece of news, you lose 7,500 that fast, potentially, right? And obviously, if you traverse from the lower end of this accelerator up, it would be the flip side. It would go very, very fast then. So that's what I'm looking for the week here, Wiz. You know, again, as a recap, I'd love to see 7,300 tested or 7,400, excuse me. I want to see today, though, how 7,500 SPX trades. Now, if we, let's say, sell, close the gap, push back above, I'm pretty bullish. I'm going to start targeting, you know, 7,600, if not 7,650. So ultimately, that's what my game plan is for the week, my trade plan. Any final thoughts on your end?
Yeah, that's kind of what I'm thinking too. I think I want to, you know, revisit 7,500 and see what happens there. VIX is saying it won't hold, but this market has been very surprising over the past couple months. So, so you can't like rely on you can't rely on the normal, I guess you could say the normal movements of, you know, and correlations. One thing I will say, the consensus is still 0.3% month over month core PCE price index. And maybe it just needs to be updated. I don't know, but it's Yeah,
Or it's
year-over-year
manipulated is what you
core
mean. I mean,
8.1.
I didn't say that.
What?
I said, or it's being manipulated. I mean, I didn't say that.
It's
While we're at it, before we get into questions, don't forget everyone to like and subscribe for
well,
these amazing details and analysis that Wiz and I provide to you.
yes. Also, before we go, before we say like and subscribe, today at 4 o'clock, go into vollanddiscord.com. I will be having a kind of like a what's it called? A market chat, I guess, with everybody who wants to join. It's right after the market close. We're making it open to everyone, not just subscribers. This time, we do have a new public channel in our Discord. The what was it called? Chill made it. So but yeah, it's the custom setups, which is our dashboards. Like what does your dashboard look like? I put mine up first. And then we
Here's
also
my beautiful dashboard. I need to add mine clearly because I marked that channel in red to go back to it, and I have not yet. So
yeah.
I need to participate.
Yeah. So we're gonna talk about like market maker mechanics. We'll probably talk about what we're seeing in markets now. So come on in. Again, vollanddiscord.com and take the invite. Come on in and we will talk markets, even if you're not a subscriber. So, and then like and subscribe, of course. So yeah, I stink at the like and subscribe.
You gotta hit that, man. This is like and subscribe to the Volland Market Moves show. See, like
Volland Stage. That's the name of the channel. The Volland Stage.
There you go. Joe's gonna have to give you a marketing prep here for the 4 o'clock show now, so you remember where you're going, buddy.
Well, no, I just click I'm interested in going, and then the thing pops up, and I just click that. So
I like how you respect your Discord notifications for events. So even bravo, better to you for that. I have so many of those. Sometimes I'm just like ignored.
Yeah. Really quick, we had one question about gold SPX correlation. So gold is not really correlated to equities as much. It only sometimes it correlates, but it's not a causing thing. Gold always correlates to real rates, and gold is kind of, retreating a little bit off those super highs because of, expectations of Fed hikes, and expectations of inflation and interest rates going up. I mean, you can have inflation, but if the interest rates go up in accordance with it, then that the gold will go down. So, so that's really the real gold correlation is gold and real interest rates. So I wouldn't look at gold versus SPX though. That's kind of more like a spurious correlation. So, all right, that's what we got. We got 10 minutes till market open. Everybody, happy trading, and may Volland help you in your future trading ventures.